Okay, guys, welcome back. And now go through the trade with Crazi 10.4 revision of the 6th of March market. All right, let's go into the market right now. Now, someone just texted me earlier when I was doing the break time, said that, Cal, you teach so much yourself, right? Don't you need to keep something for yourself? I mean, put it this way, lah. I keep it, then what happened next? All right, so might as well share, right? Correct now. It's like this: if you earn money in the market and then you have enough for yourself, then if someone needs it, then you just help that person. All right, when you have learned something from the market through knowledge, right? You know you have it, then teach the next person. I think this is something that we can do as a human being. All right. Of course, I can charge you a fee for that itself, but mine like it's okay. I always think that the world goes in a very round shape. Okay, so which means that I help you. Eventually, one day you may help me back. That's how I see it. Okay. All right. Let's revise what happened on the Dow Jones yesterday. All right. Now the Dow Jones was very clear. Dow Jones basically yesterday opened. I told you be very careful of the MA 200. I told you yesterday about that, right? I said that the market cannot touch MA 200, and if it touches and come down, the market will sell. That was not difficult to understand. But again, some people ask me, Cal, but yesterday was above pivot one, right? Then market should go up, ma? Yeah, correct. But market will go up if only if the market stays above opening price, right? Only if it stays above opening price, then the upside will be there. But since the upside is not there, the market came off after touching the MA 200. So the next thing I told you, the market must really hold MLP at 42,876, must really hold there. If not, there will be real selling. And the market broke MLP. The last, break the camel's back was the pivot one. It's at 42,788. And that was where the market was hoping to retaliate over there. And after a while later, the market break through and the selling persists. So in short itself, right, you can see in my drawing, it's pretty clear that the market KSI is red, the KCX is blue. So the boys are really selling. The boys are, the big boys or the retailers are all selling. So the market itself is pretty weak at the moment. And we already said that, right? If Donald Trump thinks it's going to work, it will work later on. The tariffs will hit the market next month onwards. When all tariffs hit already, right, and the pain come in, then by probably the next few months, then the pain will be extreme. And then after that, when the pain is ongoing, the economy, maybe due to the extra money that they have, may start to recover from there. So that is how I see the end of the second half of next year, of this year, yeah. Okay, so let's look at what happened on the chart. So at the start of the day, the market was ding-donging as normal in the day. So as I don't trade down in the morning, it's pointless. Then there is this thing here whereby you saw a 4 diamond and then you draw a line. Now when you draw that line itself, in particularly, you draw it straight. I told you guys, the moment you see there's a flip over at the line CCYR or CCRY, usually it's a very powerful move. And this one constitutes with one more interesting thing is that it touches the MA 200. Touches MA 230 already, we saw it go sideways and then it went all the way up or go all the way down. So in this case, when the market touches the MA 200 and come down, right, what do you think you will do? So that's why for me, it's I just quickly sell the market. I don't care. Once the market break below OP, I sell. And of course, there were many layers of profit taking in the market, many layers. But what caught my attention was this again. You can see that the market come down, right? The low of this particular bar exactly touched the MLP first. Then after it keep on going down, and at pivot one, you can see it stabilized 2 times before losing it. And once it lost that, right, you look at the low at that point. Oh my goodness, this is really crazy at work. The low of the day at that point was the same low of KTR -2. It's as if that the one also had this copy at home itself, and he ensured that all of us get profit. So after that, when the market actually loses that positioning and then it's going to go down, the KTR -2 is there. Resultant is because it cannot go up, boom, it came down. All right. So that's what happened for the downside. If you've done your homework properly, you've done the downside. Now for the upside itself, we can explain this through the boxer, the diamonds. But then again, end of the day, you need to follow through what we shared. Right. So you can see that the market stays up all the way, breaks pivot one, okay, go up all the way until here. Okay, but then after that, the bearishness kick in, the market come down all the way, and the diamond is still there. So by right here, you can sell too. Okay, and of course, if you know one thing about trading, if this is what everybody buy, where would their stop loss is, they'll put it here. And the beautiful part is that's where the market get triggered. Always like that itself. Okay? So it's not difficult to trade for a living. You just need to know the little tricks in there in the market. Yeah. Okay, let's look at the gold market. Now, gold market yesterday was a very interesting thing. It's a doji day, directional day, and initially I thought it would be all the way down. Then after that, somehow they bought it up again, and it stays there. So the opening price is 2918. The MLP is 29182. That means that we're talking about MLP and the day chart opening is exactly the same level. The DJDD for that. That means that where the market goes below OP, they'll sell. Above OP, they'll buy. So below OP is sell. So if very fast, the market saw 2900 already. Very fast. For those who are eagle eye, you see the market goes above 29. Yeah. 2918, right? It will be a buy, and the target is here 2944, which in line with the wait, let me just bring it down. Okay, my screen jam up. No wonder. No wonder. My screen is totally jam up. Okay. Okay. So after that, let's just take a look over here. This is the gold 5-minute chart. So go slowly with you. So first thing first, do you see that the gold go up to KTR plus one? Don't have. That was a very important tool that you must take note, guys. You need to have a bit of sensitive here. So first round never go up. Okay, then straight away there was some selling already. There's a revision, there's a line here. Boom, it came down first. All right, first wave. Then there were two diamonds and there was a 4 diamond plus one diamond, a stacked diamond together. You draw the line. And again, it went up, right? Not too much, but you see the buying was quite a fair bit, but still didn't go up. And then when the market come back down, which you can draw extension here, this was where it began. Okay, so I know that something is definitely wrong. After a morning to afternoon session, we still don't have KTR plus one. I know that we are going for KTR minus one already. All clear? Because this is actually having an 80 to 85% accuracy. That's how we do trading itself. And I can tell you this example, like if I say now, for this trade, right? Example, I buy, okay, maybe I use $50 to $100 to put this trade. That means if I win, I mean $100 for one time, one risk reward ratio. If it's more, better for me. But when the market couldn't go up, right, and I kind of realized that when the market comes down to here, I did more than that. I take a $200 to bet in. All right, so $200 divided by the entry price, which is something like 2916 entry price, 2916. Okay, the stop loss is somewhere I place somewhere around here, so that will give me approximately 2924. So I give myself about $8, but that's not $8 a lot of money. It's like 800. It's basically $200 divided by 8 times 100. Okay. So what's the answer? Anyone can help me? All right, $200 divided by 800. You get a size of, waiting for a response. Is anyone calculating it? Okay, very good done, Janet. Thank you. Yes, the answer will be 0.25 contract. So which means that, okay, let me just show to you guys. This is where I draw my line, and this is where I shorted the gold. This is my stop loss. So this range itself is about $8. Okay, $8. Okay, so I take $200 divided by $8 times the contract value. I get a final picture of 0.25. Can I understand this? So which means that my size is 0.25 size. Now I know that the market will go to KTR -1 easily. So this means that how much I risk will come back easily, right? Now because I took some profit at KTR -1, I expect it to go a little bit more. We do something here itself. Okay, so this is how you make money. All right, even though you are short in the market, you may see the range is very big, but as I say, you do some calculation, you kind of realize that it's not very big itself. Okay, all clear? All right, so that will be all for the revision for today, right? Remember, today is non-farm payroll, so go slow with your this trading today, okay? I'll keep on reminding you in the group chat, yeah? All right, then, guys, I'll see you back on Monday. Now, for those who are hearing me, for going the workshop tomorrow, please come early. If not, itself, for those who are still considering, don't waste, come, just go for the class. You will definitely benefit from there, okay? Right, that will be all for today. Take care. Bye-bye.